guys, welcome back to another London session. Today we have very low range, very low volume in the market. So you want to be trading high time frames and strongly consider not trading at all with this kind of low volume and range. I started red. I'm going to take a few more trades, feel the market out, and work from there. Looking for a partial here on this drop at 24,901. Definitely a market environment that you want to be cautious in. Okay, when we don't have volume, when we don't have range, it means that we're not going to have, most likely, continuation. We're not going to have that much follow through, and for that reason, I'm happy to close out 90% of my trade here at my first target, because the chances of continuation are slim in this kind of market environment. The last 2 weeks or so, we've had tremendous range in the market. It's been incredibly volatile, and that has provided so many opportunities for myself and my team. But today is unlike any day that I've seen in the last few weeks. The ATR is incredibly low. The 2 minute is $11. The 1 minute is $8. Even the 5 minute is $16 right now, the ATR, the average true range, right? So that's incredibly low. So you want to be cautious in that environment. It looks like it's making the right move here towards my first target. That's great. Almost there. I'm just going to leave one contract. I really don't expect much from this pre-market session here. You can see that there's liquidity issues as well with all of the gaps that are forming amongst the candles, right? If you look in a small time frame, there's gaps pretty much every couple of minutes. You've got a gap on the small time frames. So that's another indicator of low volume. Something to consider, okay? If you didn't know that, now you know. It's a helpful, quick way to determine that you've got low volume and lack of liquidity in the market. Okay, so I've covered my previous loss in the green. I'm going to go ahead and at this point put a break even on my last contract and hold it. Typically in the London sessions, I like to aim for $250, $300. That's great. And then I move on to the New York session and continue to stack from there. So right now, if we're to look at high time frames, just to figure out where can this go, what are the possible destinations right now, where could we run to? So looking at the hourly time frame, our most recent sell side liquidity is sitting here at 24880.75. After that, there is nothing until 24,491. So given that there is 380 points distance here between these two key levels in the 60-minute, I'm going to dial down the time frames here and just see if we can find another point to aim for. All right, so there we go. Right away on the 30-minute time frame, you can see that we have 24828. So that would be a nice target from the current 911 short. Okay, so I'll be looking to cover that last contract there. Otherwise, break even comes, which no problem. I welcome break evens. Break evens are great. They protect you from a trade or a condition that is not in your favor. It's not working in your favor. So where I see the market going right now is first here to 880.75. That is the last resort point on the 60-minute time frame. Members on Zoom, you know why that's a last resort, right? So a heavy-duty point there. But if we break past it and continue to slide, then you can expect 24,828. Okay, that's where the market's going to be drawn to. And so that's what I'm going to aim for to cover that last contract. And then I'll stop for the London session. That would be wonderful. Let me go in a 15-minute time frame, see if I can find another point of interest. Okay, so the next would be here. It continues to slide even more, 760. So 2476, 1.5. And then we're dealing with the 24,500 levels again. But, I do suspect that we're going to retest the previous session's highs at some point. So I'm not looking for that low of a move. I'm not going to wait for a 400 or 500 point move. I'm very happy to get out at the 30-minute sell side liquidity point at 24,830. So let's see what happens. Now, on a regular day where I see that the market has a lot of range and volume, I definitely would have been leaving at 5 contracts, right? If I'm in a 15 contract position, which I was only in that size because of the incredibly low range, then normally I would leave 30% to run. But in this case, I'm not expecting it to run because the market is telling me that, hey, I don't have much range. There's not much volume here. Nobody's really home. And so for that reason, securing the majority of the trade out just to cover the previous losses. And if one contract decides to run, well, that's great. So be it. But chances are it won't. We'll see how it goes, of course. There's no point predicting or trying to guess. But statistically, in this kind of environment, we don't have follow through. So I'm happy that I closed out the majority of my position. Yeah, of course, I could have made a lot more by now, by this point. But that's okay. We trade on probabilities and experience. So I'm going to let this contract run and let's see where it goes. So we've arrived to the 60-minute liquidity point here at 880. Now if the price reclaims this level, holds above, then we can expect this to retrace back up to the pivot high in the 60-minute, which is at 955. Otherwise, I'm confident we'll see 827, at which point I will close out at 829. So if we get a 60-point push, that'd be great. Continuation. Otherwise, again, price could reclaim this level and start to push on up again. It could turn into a liquidity grab. So let's see. I got nothing to lose at this point. It's a free trade. What happens, happens. Now, when you're holding for a destination like I am, guys, you've got to understand that the market's going to fluctuate on the way down to the destination. So I don't know that it's going to get to 24,829, right? My limit order. I've got no idea. Nobody knows anything. But I do know that that is a destination. It is a magnet, and the market could be drawn to that point if we stay under this level. You know, and so I don't have that thought of, you know, what's going to happen if I lose my unrealized gains. If I lose my unrealized gains, it is what it is. That's the risk that I have to take in order to get those bigger moves, right? So it's impossible to get the moves that you desire in hindsight when you look back at the charts at the end of the day and say, wow, look how much it moved. I could have made this much. Well, you won't make that much if you close the trade, or if you panic or start to worry. If you're not willing to give back the unrealized, then you just won't get those moves. So it's something that you have to build over time. It's, you know, an emotional barriers that you need to push further over time with experience and practice. It's just a sacrifice that you have to make sometimes in order to get that move that you're looking for. And 829, it's not a random level. You know, it's not like I'm aiming for some arbitrary level because I want my P&L to be XYZ. It is literally a very specific liquidity point, and it's the next destination of the market. So if the market continues to move lower, it will go there. 100% it will, if the market stays under this level of 880. Now, of course, it can make an attempt here to break over and then start to run up again. That's fine. I'll lose $16, right? So I'm paying $16 potentially to stay in the game, right? And that's just a decision that you have to make. It's something that you have to do in order to get those long-term moves that really grow your account. Okay, so, you know, again, like I said, today is a low range day, low volume, so I'm not expecting that much continuation, which is why I only have one contract running. Normally, especially if I was in 15 contracts, I would leave 4, you know, to run, but not today, not today. So, you know, if it comes back, that's cool. I don't mind. We have to not care. Okay, we have to not be so attached to dollar signs. In fact, even better off if you just completely, excuse me, if you completely remove the dollar sign and you just look at this, right? That way you're not worried. You don't think about the money. It's just pure chart trading. What happens, happens. And you completely submit to your plan. Right now, does it look like break-even's gonna come? Yes. But I have a plan and I'm gonna stick to it. You know, the next trade or the next day, that move that I'm looking for will happen. But if I worry and I overmanage my trade and panic and I have fear and all of these useless emotions when it comes to trading, then I'll never get those great trades, right? So long term, this serves me. So I don't mind at all if this goes back. Not at all. And that's a level that you want to get to in order to succeed in this game. You have to not care. You've really got to not care. If you have a winner, I've said this in previous videos, if you have a winner, you don't want to be overexcited, too happy, you know, because at the same time, if it's a bad trade and you get stopped, well, then you're going to be very upset, very frustrated, right? Yin and yang. So for me, I prefer to not feel anything, at least to the best of my ability. Am I slightly annoyed? Of course, I'm human. If it comes back and hits break even, of course, I'll be like, ah, man, come on now, market, you know, with a smile on my face, and I'll move on and take the next trade. But if you're really letting it get to you, then that's going to trickle into your next trades, and it's going to affect your behavior in the next trades, and you don't want that. You really don't want that. Okay, it's a domino effect, a vicious cycle that you enter, and that doesn't help anybody. So we aspire to feel nothing. What happens, happens. In fact, what I will do is I will take a short here because we have a 5-minute BC8. If it triggers. I'm a little late to the party. I should have taken it earlier if I wanted to. But we had a BC8 signal, and that implies a drop back down to the mid 60s. It's starting to make the drop now. So I think I missed it. I missed that. It was definitely a good add point. Yeah, I'm going to cancel that for now. No, I'm adding. Okay, so I'm going to, in this case, cover four of these 5 here at 867, and my stop is going to have to be above here. So it's basically an entirely new trade that I'm taking here at this point, based on the BC8 system. And if we hit 867, then I'll be making more than I would have made if it had gone all the way to my last destination. And at that point, I'll call it. I'll cut four of the 5. That's looking good so far, looking good. Awesome. Okay, so there we go. So I've already hit my daily target for London now. That's amazing. And I've lowered my last contract to a break even here. I'll give it a little more. No, I'll put it there. And if this continues, well, then I can still get my 829, make an extra 107. But at this point, whatever it does, I'm happy. I've hit my target here for London session. I don't need more. So either way, I'm finished for the London market. And I'll see New York next. I have a few more 300 more on this particular PA to hit the payout on this one. So getting there today, most likely. Very pleased with that last trade there in the 5-minute. 5-minute really is king. When the market has no range, if you're going to trade, you're better off looking at the 5. Looking at the 2, 1 minute, you're going to get way too many signals. The ATR is low. You've got to put high contract sizes like I did before. It's just not worth it. All right, so here comes my break even most likely. Beautiful. Okay, so I'm out. Great session. Money has been extracted from the market out of thin air. And I'll see you back in New York time. Hope you enjoyed the video.